Welcome back. Here we are, ready to crack open another big one. When I say big, oh, by the way, you like my haircut? I think it's pretty good. This week, obviously, we can't go past Afterpay. And any big deal deserves a big cold beer. I'm sure the boys at Afterpay, Nick Molnar and co, are drinking a few of these. I call it Krakatoa. It's the big one. I can hardly even put my hand around it. Listen to that. As I say, the sound of COVID. A big cold beer deserves a big cold sip. Sometimes, as they say, size does count. I mean, it's not bad. It's a Sunny Pale, it's called. It's from this brewery up the road, White Bay. As you can see, takeaway. Well, you can take it away. And I don't think the police are going to arrest you for this. Well, they might, but you know. What's life without a risk? Like, let's talk about Afterpay. I mean, sometimes size does count. 40 billion is a lot of money, let alone for a company that wasn't even around until 2014. I mean, I grew up learning about stocks and PEs. Well, I don't think the E seems to matter much in this transaction. I must admit it's been through a few swings and roundabouts, but like the power of Australia's great credit unwashed youth, a good-looking CEO and unashamed lobbying has delivered the goods. My hand was hovering, as was Caroline's, when that got down to $14 during the pandemic, but we fell short. God, what a missed opportunity. I mean, we first looked at it when it was $2.50 or something. I mean, people didn't even know the word Fintech, and that was only like 2017. The younger people knew about Afterpay before the old, which I think is a good clue to this company's success. But the thing is, who would have held on? At that time when we looked at it, we were in the middle of the pandemic, and the stock got down to $11, I think. But I think also that panic selling has never worked. I mean, that's the key. You have to show the face when the what's that Churchillian, the darkest time is the dawn or something like that. I don't know. The darkest hour. I don't know. It was a good film though. But I think basically you have to look at the bigger picture. That's what investing in some of these stocks is about. I mean, you don't really panic, but you also look at the numbers. Because I remember when they were about $20 or something, people ridiculed me for thinking, oh, this stock's going to go well. But I said, if this company does what it can do, what it's talking about with its US ambitions, if it can do that, then it's worth a lot of money. And and that's even if they came close to achieving that kind of those ambitions. And that's what we're talking about now, because we're in the middle of, we're just starting in reporting season. So people are going to be looking at what the companies say, because what they say really matters with the degree of uncertainty we've got with this Delta strain running around. Let's just have a sip of COVID beer, Sunny Pale Ale, just to take that in. I mean, on the macro front, we heard from our friend Phil Lowe from the RBA, even though he was talking about reduced bond buying, basically low interest rates aren't going anywhere. I mean, this economy has grown on the basis of demographics, on the basis of immigration. So that's hardly going to start again anytime soon. Basically, low interest rates are here to stay. But, I mean, the big shock for us so far was Rio Tinto in this reporting season. So, not for its record dividend, but for saying that lithium demand is going to increase at up to 35% a year for the next decade. I mean, that's sort of in the ballpark of what we've been saying, but this is one of the most conservative companies you'll ever find. I mean, this company might blow things up, but they certainly think about it before they press the button. I mean, one of the stocks we covered this week, which we covered less than 4 weeks ago, Lake Resources, I think they're like Argentinian-based developer, lithium developer, that's up over 50%. That's in a few weeks. So where does this leave us on stocks, people? What are we going to talk about before I quickly have another beer with my new slick haircut? Well, if Afterpay says anything, it's growth. Growth's what people are after, and it's one of the big reasons for takeovers. Last week we talked about in the resources sector, in lithium, because it makes a lot of sense and it's happening. Let's look at some industrial candidates. Praemium. I've mentioned it before in our little fireside chats, with the absence of fire. Thank God. But it does look expensive on a PE multiple of 30 times. But who cares about PEs? PEs don't mean anything. And it's got no current dividends. Who cares about dividends? The thing is that this company has a chairman who's an investment banker. That's like Afterpay. Afterpay's chairman is an investment banker. That must mean something. Basically, on a market cap to funds under administration, it's trading at like 2.2%. So that means you're getting more bang for your buck for every fund, every dollar it manages under its umbrella. On the other hand, net wealth, which is considered like one of the potential predators for if not the predator for Praemium, trades on 7.5%. Those sort of rough numbers, and that's on Praemium's Australian operations, because as you're probably aware, they're trying to get rid of the pesky UK operations, which seem to be a fly in the ointment. The other one you can't go past these days in terms of consolidation, and that there's always takeover potential there. It's still happening, and that's media. Like basically, if you were to look at heavyweights on boards, even though they might be dinosaur heavyweights, they're still heavyweights. Kerry Stokes, Bruce Gordon, Anthony Catalano, Alex Waislist, these guys own significant stakes in a company that's on the market to be sold because of the changing regulations that had previously prevented a sale. So this is like on competition grounds. So a takeover is complicated, but this is definitely one that's on the chopping blocks. Another one that's interesting, and certainly under the radar when it comes to buy now, pay later, and that's because it's got the lowest market cap of the incumbents in the sector, is Splitit. So this company has done a deal in Japan. How big the deal is, we don't know, but it's been mentioned. It's a name. It's small enough to be under the radar. It's got a differentiated niche. Basically, they use your existing credit card limits to access funds. So it's quite innovative, Israeli-based. Don't know what that means, but it's got a niche, and it's one that looks interesting. So what's up next? What are we going to do? Well, first up, I'm going to have what I like to call Krakatoa, the explosive beer. Oh, geez, in terms of ratings, I'm just not sure. I think it does the job, and certainly there's meant to be 3.3 standard drinks in this thing. People, this friend of mine saw me walking my dog, who seems to be he saw me and he said, "Boy, you need a beer." And I said, "I've got no money. I'm walking." He handed me $10 and said, "Here, get yourself a Krakatoa." So I had to go home. By the time I got home, got my mask on, went back, it was closed. But luckily for me, breweries don't stay closed forever. So what we've got up next is that we've got advice from fund managers, before these results come in thick and fast. So these fund managers are giving you general and stock-specific advice. It's really worth reading. But what we're really excited about is more lithium analysis coming up next week, and also the reporting season. So where there's going to be a lot of commentary, and we're going to have to look at a lot of financial accounts. And it's important because there's so much complexity. A lot of these guys and companies, they thought like JobKeeper was their genius, and they put it above the line. So you have to do things to sort out the wheat from the chaff. Anyway, here's to Krakatoa. Here's to exploding beers. Talk to you next week.